Within the equity markets, we continue to think there'll be a significant amount of dispersion or a range of outcomes across different sectors within the equity markets. So while our overall equity exposures have declined in Franklin Income Fund, we are really trying to isolate and look for those opportunities that have maybe taken a little bit more of the impact of this decline in markets and slowing outlook for the overall economy. Within fixed income markets, we're really looking at those securities that have been most directly impacted by the rise in long-term interest rates. So starting with U.S. Treasuries, I'm really looking at the assets that price most directly off of that. Investment-grade corporate bonds in particular have been an area of the markets that we've been increasing our exposure to. Finally, within hybrid securities, so those that have characteristics of both debt and equities, we continue to favor opportunities within convertibles and equity-linked notes, where we can identify opportunities for not just attractive current income, but also securities that give us some exposure to the fundamentals, the underlying common stocks, with a little bit lower volatility. Over the past year, as we've seen interest rates and yield opportunities increase in the market, we've really been very focused on translating that into higher income for our portfolios and thus the ability to pass through higher yields to our investors. Looking forward, we continue to think yields which have risen and may continue higher as the Fed continues on its path to slow inflation. We do think that'll open up opportunities for higher income in our portfolios, which will certainly be very focused on delivering that to the fund's investors. And when you think about the challenges that have been presented in financial markets in 2022, our income strategy, and more specifically the ability to really be dynamic in how we allocate assets across those most attractive opportunities for income, has really been key in not only enabling us to deliver on our investment objective for our investors, but also navigating these very challenging markets and continuing to look forward around where the best opportunities have been. That in 2022 was largely about mitigating some of the interest rate risk exposures that are in markets. And as we've progressed through the year, that risk component started to shift. We've become incrementally more comfortable with interest rate risk. As interest rates have risen, it's really presented some fairly nice opportunities for us in the fixed income markets. And at the same time, looking forward with the expectation of a deceleration in economic activity, a very possible stalling out, if not decline in earnings, if we were to enter into a recession in the U.S. economy. So we've become a lot more selective within our equity market exposures and certainly want to be mindful of that going forward. So to recap, it's really that broad opportunity set that we have and the ability to be fairly nimble around the type of exposures that we have, both on an asset class level as well as on a sector level.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。